Hello students and welcome to this additional explanation on operating budgets. This was a question from a previous semester test and it is called Mardas Photography. So the management accountant of this business requires you to assist now in setting up their operating budgets. And I just want us to look at the required part first before we go through the question. So you will find that in 1.1 you have to do a sales budget. In 1.2 there's a production budget, 1.3 direct materials, 1.4 labor, 1.5 overheads, 1.6 they ask the cost per unit, 1.7 the cost of goods sold, and in 1.8 the budgeted income statement. They say that the cost per unit must be rounded to 2 decimals and all other calculations to the nearest whole number. All right. So they say here that there's estimated sales, and this has two products. Or in this question, there's two products. It has a product called Instant Image and a product called Pro Image. And of the Instant Image, we have to sell 26,800 at 65 Rand and 20,400 units at 90 Rand of the Pro Image. Then the estimated inventories have been given there. So there's some direct material and finished products. So you will see that there's also two materials. It is celluloid and silver. And for the finished goods, again, it's the Instant Image and Pro Image, and they've given you the kilograms and the units respectively, as well as the cost per kilogram and the cost per unit. Then they've also given you desired closing inventory for the celluloid and silver, as well as the finished products, Instant Image and Pro Image. And then they've given you the anticipated costs per kilogram, 1 Rand 50 and 6 Rand. Then for the celluloid, there's celluloid and silver. It's 0.4 kilograms is required of celluloid to make an Instant Image, 0.6 kilograms to make a Pro Image. Of the silver, there's 0.25 kilograms required for the Instant Image and 0.4 kilograms for the Pro Image. Then there's also some direct labor requirements. There's two departments, a coating and a cutting department, and they've indicated to you now that it's minutes, but the rate is per hour. So for the Instant Image, for the coating department, we need 12 minutes at 14 Rand an hour. For the Pro Image, it's 24 minutes at 14 Rand an hour. For the cutting department, it's 18 minutes at 16 Rand and 18 minutes at 60 Rand for the Pro Image as well. Then they've given us some factory overheads, indirect wages, depreciation, water, electricity, and insurance. And we are told that the overheads need to be allocated to the product based on the units that are produced. Point number G, they've listed for you all the selling and admin expenses for your month of April. And in the final note, we are told that the rate is 28% in terms of your tax. All right, so if we look at the first one, which is required, which is the sales budget, I believe that was 1.1. This just to tackle that one first. It is the simplest one by far. And we have two products. For the purpose of this video, I will just call them Instant and Pro, if this keyboard will ever work. Right, so we need the sales units and the selling price. And the total. We are told of the Instant, we require 26,800 units. Of the Pro, we require 20,400 units. The respective selling prices is 65 Rand for Instant, and it is 90 Rand for the Pro. and then I simply need to multiply those two figures. And I'm also just getting to a total for in case there is half a mark for the total. Right, the next required budget is the production budget. And again, we have these two products, Instant and Pro. For the production budget, we start with the sales units. We will minus our opening stock. And we will add back our closing finished goods. The sales unit should be easy. It will be the same total that we used in our sales budget. And then the finished goods total has been given to us. If we look at the information, it says the opening stock will be 4,800 and 2,400, and then there's also an estimated closing stock 5,400 and 1,900. So I'm just going to go back to my memo and fill it out. So for the opening stock, it's 4,800 that I am deducting for Instant, and for Pro 2,400. The closing goods, I'm adding back 5,400 as well as 1,900 units. Please note how we use the finished goods when we are calculating the production budget. And now I'm simply adding all my budgeted elements together, my budgeted units, opening, closing stock, and sale. And I'm also getting to a total for in case there is half a mark there. Right, production budget done and dusted. We can move on to 1.3, and that is in the required part, the direct material purchase. Again, we are now going to change our columns to the types of products. We have celluloid, and we have silver. And I'm going to start with the first type of product, which is the instant image. Right, production units for this one. Just going to put that in bold so that you can see clearly. Right, production budget for the instant, we just calculated it. It was 27,400 units, and it will be the same production units for both products because we need enough celluloid to make 27,400 instant image products, and then for the silver we also need enough silver to make 27,400 of the instant image product. Then the input, I believe that the input was given to us in note number D. If I can just take you back to the question. In note number D, 0.4 kilograms of celluloid for instant image, 0.25 kilograms of silver for instant image. So I'm just going to fill that into my memo. So under celluloid, 0.4 kilograms. For silver, 0.25. And I need to get a total there through multiplication. Right, our next product was the Pro image. And again, we're going to start with the production units. And we calculated the production units to be 19,900 for this one. I will then again multiply by the input. If we go back to our question, you will see that for Pro image it's 0.6 of the celluloid, 0.4 of the silver. Right, so I'm filling that in. and then I need to get to a total again, and I will again multiply the units by the input. Now I will get to a grand total by adding the two totals together, so that I can see how many kilograms of each type of product I will need. And then I will have to take into account my opening and closing stock. Opening stock will again be subtracted, closing stock is added back. The opening stock information was also given to you. If I go to back to the question, you will find that for the celluloid at the beginning of April, we had 2,700 kilograms, and of the silver, 8,500. Then the desired closing inventories was 3,400 and 2,900. I'm going back to fill that in to the memo. So for opening stock, it's going to be a negative, and in the opening stock, 2,700 of celluloid silver, 8,500. In the closing stock, I'm going to add back the 3,400 kilograms as well as the 2,900. Right, I will get to kilograms to buy. And it will be the sum of my grand total together with the opening and closing stock. Then I need to multiply by the cost. That was also given. I want to go back to the question. A cost R1.50 and R6 per kilogram. So that needs to be filled out as well. Total purchase. Kilograms to buy times the cost. And I will then also add these up to make sure that I do not miss half the mark. That's a bit of exam technique. Total cost then in terms of material purchases, 90,660. We are on the next required part. They are asking us the direct labor budget in 1.4. And we have two departments now. I'm going to use my products as the columns. And the first department is coating. And there I'm going to say production units, input, cost, total. And I will also have a department for cutting. And I will just repeat that layout. For the instant, the number of production units was 27,400, and for the Pro it was 19,900. Then the input, I believe there was a problem in this question in terms of the time, because it was not given in the same metric. So if I look at the time, it says it's 12 for the instant image. The coating department requires 12 minutes at 14 Rand and 24 minutes at 14 Rand as well for the Pro image. So there I'm going to now have to first divert it and say 12 minutes will be 12 out of 60. And for the Pro image, the coating department takes 24 minutes out of 60. Then the cost for the coating department is 14 Rand. And I will calculate the total there through multiplication. Right, I will repeat this for the cutting department. So obviously the production units will remain the same, but I believe that the input is different. If I look at our question, it's for the cutting department, the instant image takes 18 minutes and the Pro image takes 18 minutes as well, and the cutting department rate is 16 Rand per hour. Going back to the memo, I'm going to type in, it is then 18 minutes out of 60 minutes to get to an hour, and it is 18 minutes out of 60 minutes again. And the cost there was 16 Rand for an hour. Again, I will just multiply to get to a total. Total cost then of both departments will then be the totals added together. And then finally, I will also add both of the products together to make sure that I do not miss half a mark. And that is our labor budget. 1.5, it requires us to do the overhead budget. If we go to the overheads, you will find that the few overheads have been listed there, and then they tell us it needs to be allocated based on the units that are produced. So on the memo, I must first do a little calculation to get to the sum total of all our overhead. It is the factory wage, the indirect wage. Then there's some depreciation, there's water and electricity, and there is insurance. Woo! We just type correctly there. Right, the indirect wage 511,290. The depreciation 145,000. 49,000 Rand for water and electricity, 18,400 Rand for the insurance. So I'm just going to get to a sum total of all these overheads. And then I need to calculate my rate. So the rate will be the overheads in Rand divided by the total cost driver. In this instance, we were told that the cost driver is the production units. So this means we are going to take the 7,236.90 and we will divide it by the production unit total. And if we go to the production budget, the total there was 47,300 units that we've calculated there. So we need to go and divide. And we will then get to a rate of 15 Rand 30, and this is of course per unit. Right, in constructing the overhead budget, I am still working with two products, Instant and Pro image. The cost driver here is the production units. So again, I'm just going to put the total in, and 19,900 for Pro. Then we've just calculated the rate, 15 Rand and 30 cents. And then of course the total, which is just multiplication. Right, that was our overhead budget in 1.5. We are doing 1.6. And in answering 1.6, we need to calculate the cost per unit. Again, we have two products, Instant Image and Pro Image. And let's see, I remember that we had two materials. So I'm going to start with material celluloid. And we had material silver. Then we had labor, but there were two types of labor. So there was labor in terms of coating and labor in terms of cutting. And then we had our overheads. But the overheads were allocated based on the rates per unit, so I can already use the 15 Rand and 30 cents as is. So that's the easiest part. Then for the celluloid, if I go to Instant Image, I need to go and find the information that relates to this product only. And we are told in terms of the celluloid, the Instant Image uses 0.4 kilograms, and the price of the celluloid is given as 1.50. For the Pro, it is of celluloid 0.6 kilograms. And again, the celluloid is 1.50 Rand per kilogram. For the silver, it is 0.25 kilograms for the Instant Image, and for the and the silver price is 6 Rand. For the Pro, it is 0.4 kilograms, and the price is 6 Rand per kilogram. Then in terms of the labor, for the coating, the Instant Image uses 12 minutes, and the rate is 14 Rand for coating. The Pro Image uses 24 minutes, and again the rate for coating is 14 Rand. For the cutting, 18 minutes are used. For the Instant Image, so that's 18 out of 60 minutes at a rate of 16 Rand. And then there's also 18 minutes divided by 60 at a rate of 16 Rand. I will now get to the sum of everything so that I know what the cost per unit is. Right, wonderful. So the cost per unit for the Instant Image is 25 Rand. For the Pro Image, it's 29 Rand. Moving on to required 1.7. In 1.7, we need to do the cost of goods sold, or cost of sales, as it is sometimes called. Now, for the cost of goods sold, I like to first just start with my layout, because then I know what information I need to look for. So the first one I need is the direct material, but this is issued, the direct material issued. We need the direct labor. We add those two up, we get to prime cost. Then overheads, we get to production cost. We then need our opening finished goods to be added. our closing finished goods to be deducted, and then we get to cost of goods sold. The material is normally the more difficult one, so I'm just going to fill out the ones that are easy already. The first one that's easy is the direct labor, so I'm just going to go back to my labor budget, and I've calculated the total there, 415,200. Then I've also calculated a total for the overheads, so I'm just going to go back to my total in that calculation, and I have a total for overheads. Right, for direct material issued, we need to go and do a proper calculation in terms of a T account. So I'm just going to quickly draft a basic T account for you so that you can follow the explanation. For material, we have an opening balance as well as a closing balance. And we just do that. We have a purchases, that is easy because we've already calculated that. And then we need work in progress, and that will be a balancing figure. So I'm just going to quickly draw some double lines here. Right, the purchases should not be too difficult. We can go back to our purchases budget. And the total there was 90,660. Then for the opening stock, if I can just take you back to the question, we need to go and see for the materials. It was opening stock of celluloid, 22,700 at R1.50, 8,500 for silver at R6. So I need to do that multiplication. So in opening stock, I'm going to say it is then the 2,700 times R1.50 plus the silver, which was 8,500, yeah, it's R6. We just double check what I'm saying here. And then we have a closing balance. So the closing balance was also given to us. If I look at the closing information, they've told us what the closing balance for the materials will be, 3,400 and 2,900. And again, the anticipated cost was R1.50 and R6 respectively. So on the memo to get to the closing stock, I'm going to say it is 3,400 times R1.50 plus the 2,900 kilograms of the silver times R6. Now I can calculate the balancing figure of the work in progress, but I must first get a balancing figure between the double lines, a balancing total. And it will then be the 145,710 minus the 22,500. 123,210, that is the materials that were issued. Prime cost, sum of direct material and direct labor. Production cost, prime cost plus overheads. Then the finished goods. So now we have done a cost per unit. So let's just start with the closing finished goods. We have been told in the question the expected closing inventory, 5,400 units, 1,900 units of instant and pro image respectively. So here I'm going to say for finished goods, it is therefore 5,400 units at R25 cost per unit plus the 1,900 expected units of pro image times R29. Finished goods, it needs to be negative, so I'm just going to say minus and then put everything in brackets. For the opening stock, we have been provided with information relating to this. it is 4,800 units at 24 Rand, 2,400 units at 27 Rand. And they were so kind as to give you the opening stock values per unit. So under opening stock, I will simply say it is 4,800 times 24 Rand, and I add to that my 2,400 at 27 Rand. Oh, what happened here? My cost of goods sold will then be the sum of the production cost plus opening stock minus closing stock. And it is therefore 1,252,000 cost of sales. Last part is required 1.8, and there we have to do the income statement. So for the income statement, we will have sales less cost of sales. That gives us the gross profit. We will then minus the other expenses. So let's see, before we do the profit before tax. For sales, we will go to the sales budget, and our total sales was 3,578,000. Our cost of sales was the 1,252,000. And we get to a gross profit of 2,326,000. The other expenses were given to us in this question. If you look at the note number G, they've given us the salaries, advertising, your office, your depreciation, your telephone expenses, travel expenses, office supplies, and other admin expenses. So all of those will go into that calculation. Now I just need to add them up properly. Sales, salaries, advertising, office salaries, depreciation, telephone, selling expense. Then there's also a telephone admin expense. Then there's some traveling cost. There is office supplies and some other admin expenses. If we look at the totals, it was 225,000, 146,500, 120,800, 5,300, 5,000, 1,900, 38,500, 3,000, 4,200. I need to get to the sum of all that. And that is 550,200. Your profit before tax will then be the gross profit minus these expenses. Then we need to calculate our tax for the year. And that will be 28% of the profit before tax. So it will be that total times 0.28. And then we have net profit for the year. And it will be your profit before tax minus the tax. So the net profit for the year is 1,278,576. Right, I wanted to make a recording on this question. I hope it will help you a little bit in your preparation for the tests and also for the exam even. I will then see you in my office for consultation should you have any further questions. Until then, enjoy your day.